I expect this cycle to be shallower than previous cycles. In other words, I don't expect a 75% pullback. Is 50% enough? Could it be 60%? Could it get down into the 50,000s again? I think that's entirely possible, but I think the cycle will come. I think the upside is significant. I think we'll be higher by the end of the year than we are here. And then I think we're going substantially higher in the future because the institutional capital is still coming into the space.
Bitcoin investors have spent months asking the same question. Has the market finally found its bottom, or is another painful leg down still ahead? After a period marked by volatility, shifting macro conditions, and growing uncertainty across financial markets, many traders remain fixated on predicting the exact price level where Bitcoin's correction will end. But according to Bitwise Chief Investment Officer Matt Hougan, investors may be focusing on the wrong question entirely. Hougan believes that while Bitcoin could still experience additional downside, this cycle looks fundamentally different from those that came before it. Unlike previous bear markets that saw brutal 75 to 85% drawdowns, he argues that the growing presence of institutional capital may be changing the structure of Bitcoin's market. While he acknowledges that prices could revisit lower levels, he remains convinced that the larger trend remains intact and that significantly higher prices still lie ahead. More importantly, he believes investors are becoming distracted by short-term volatility while overlooking the much bigger opportunity developing over the coming years. In this video, we'll break down why Matt Hougan believes Bitcoin's correction may be much closer to its end than its beginning, why institutional adoption continues to be one of the strongest bullish forces in the market, and why he thinks the real question investors should be asking isn't where Bitcoin bottoms, but where it ultimately tops. Make sure to stick around until the end because we'll also examine his debate with Bitwise Head of Research Ryan Rasmussen over interest rates, investor sentiment, and the hidden forces shaping crypto's next major move. If you enjoy this type of Bitcoin and macroeconomic analysis, don't forget to like this video, subscribe to the channel, and turn on notifications so you never miss an update. Every cycle, people make money in crypto. Every cycle, people lose it to hacks, exchange collapses, and compromised accounts. iTrustCapital's premium custody fixes that. It's a closed-loop system. Crypto goes in, but withdrawals only come out as USD to your verified bank. Nobody can drain your wallet because there's no external wallet to drain. Assets are held one-to-one, off-balance sheet, with full tax reporting. And inside an iTrust IRA, gains can grow tax-deferred, or tax-free in a Roth. Real U.S. customer support. $100 bonus when you fund through the link below. Same market, smarter structure.
I read a lot of crypto research, but one thing that happened was I got 3 notes from 3 of my favorite crypto research firms, all on the exact same topic, which is, has Bitcoin bottomed? And they were Galaxy Digital, which I think is fantastic, NYDIG, and Standard Chartered. And the thing about getting all 3 of those in the same week is that they said all 3 possible answers, right? So you had Galaxy Digital, which basically said, no, Bitcoin hasn't bottomed. It looked at, I think it was 12 or 11 different metrics that historically occur at Bitcoin bottoms, and only 3 had occurred. And it said, we're going to 40K. Okay, that's sad, right? And then I got NYDIG, and it looked at historical Bitcoin cycles and said they were like 90, 80, 75. We're at 50. And it was like, maybe that pattern follows. Maybe 50 is the bottom, or 50% down is the bottom. But actually, they thought, we probably go a little bit lower, 50% to down to 50K or so. So they were at the maybe level. We went Standard Chartered, which has been great, and actually took down their Bitcoin projections earlier this year. So they're not Pollyanna. They understand what's going on in the market. They said the bottom is in. 59K was it. We got past SpaceX. We have a turn on ETF flows. The bottom is in. So I have 3 of my favorite researchers asking if the bottom is in and saying no, maybe, and yes. And if that doesn't capture the confusion that most investors feel, right, I don't know what is. But the thing that occurred to me as I read all those is that was only one way of looking at what they were saying. Actually, if you inverted their pieces, the thing that all of them said but didn't headline their piece in is that they all thought the bottom would come. So they think the bottom will be in, but they don't think the top will be in. They were all calling for a new cycle where Bitcoin would hit this bottom and rally. None of them had given up. None of them were bearish. They all thought we were closer to the bottom than we were to the October top. And they all thought Bitcoin would go on to another bull cycle. And that's when it hit me that the relevant question is not where is the bottom? The relevant question is where is the top? If you think the top is not in other words, you think Bitcoin is going to trade back above 125K, and I've told you before, I think it's going to 1.3 million, then who cares? 50, 40, 60, whatever. Of course, I posted that on Twitter, and Twitter was like, if you do the math from 40 to 1.3 million. But that's not the point. The point is, if it goes to $1 million, you're not going to care if you bought at 40, 50, or 60. So the far more important question than where is the bottom is where is the top. And I think we don't, as an industry, focus enough on the question of where is the top. And I think the top is substantially higher. I mean, I think NYDIG is probably the closest to right.
Okay.
I think Galaxy overfit. You can't expect all 11 things to happen exactly in those frameworks. And Standard Chartered was maybe a little bit early calling the ETF turn-in flows. And so I would say that, it's really a cop-out on my part to say the answer is maybe. But I think what I would take away from it is like, look, I expect this cycle to be shallower than previous cycles. In other words, I don't expect a 75% pullback.
Yeah.
Is 50% enough? Could it be 60%? Could it get down into the 50,000s again? I think that's entirely possible. But I think the cycle will come. I think the upside is significant. I think we'll be higher by the end of the year than we are here. And then I think we're going substantially higher in the future because the institutional capital is still coming into the space.
What makes Hougan's perspective particularly interesting is that it isn't based on blind optimism. Instead, it's rooted in the fact that some of the industry's most respected research firms have reached very different conclusions about Bitcoin's recent correction. While some analysts believe the market could still see significantly lower prices, others argue that the bottom may already be behind us. Yet despite their disagreements about where the correction ends, they share one important conclusion: none of them believe Bitcoin's long-term bull market is over. That realization led Hougan to focus less on finding the exact bottom and more on understanding the potential magnitude of the next advance. In his view, if Bitcoin eventually reaches levels far above current prices, today's debate over whether the low was $40, $50, or $60,000 may prove largely irrelevant. But the discussion becomes even more interesting when the conversation shifts toward what will actually drive the next phase of the cycle. In the next segment, Hougan and fellow Bitwise executive Ryan Rasmussen examine whether rising interest rates are suppressing crypto markets. Rasmussen argues that shifting rate expectations have damaged investor sentiment and redirected capital away from digital assets. Hougan, however, believes many investors are overestimating the importance of interest rates altogether. Instead, he points to larger structural forces, including the persistence of Bitcoin's 4-year cycle, broader liquidity conditions, and a massive rotation of investor attention toward artificial intelligence, robotics, and other emerging technologies. Their debate highlights two very different explanations for why crypto has struggled to capture investor enthusiasm, despite continued progress beneath the surface.
I know there's a big Kevin Warsh freak out about how he killed the debasement trade. I think that's true from a short-term perspective, but I don't think interest rates really matter that much at all. I actually think it's a false god that we're worshiping from prior cycles. And I don't think that's the driver. I think it's the 4-year cycle that's still in charge. And I think we're going to be just fine.
Man, you think it? Okay. So is there any, Matt, I've asked you this like 100 times, but is there anything, what would invalidate the 4-year cycle at this point? Because it does, I agree with you. It is in charge. And if you see a bottom in Q3, then that's it, right? Like then we continue to believe that. Is that even possible at this point? Like, is that still what you think is going to happen?
Q3, Q4. I mean, if Bitcoin doesn't go up next year, I think you have to believe it's in force until it's no longer in force. And it appears to be in force. There's reason to believe we're moving through the sort of liquidity cycles, et cetera. I think we'll get out to the other side. Specific to interest rates, the reason I think it's a false god is we're talking about tinkering with interest rates. 25 basis points up, 25 basis points down. Who cares? I've said it on the show before. We've been used to this cycle of interest rates that swing from 5% to 0 to 5% to 0. That's what we've had since Bitcoin was created. And I think what we're talking about now is interest rates that hover around here for the foreseeable future. That's why I don't think it's actually as important. We've just been taught it's important. I actually think Fed balance sheet and Treasury balance sheet are more important than interest rates specifically. But Ryan may take the other side. He may well be right.
Yeah, well, no, I think I am right, for the record there. But no, I was just looking at there's definitely some truth to that. I think that in expectations around the direction of interest rates is something that investors think about, particularly younger investors who are debating where to allocate capital. Perhaps they are trying to save up money to buy a house and trying to decide, do they buy a house now? Do they buy a house later? What should I invest in? Like all of this, I think, is part of this capital rotation and what sucked liquidity and euphoria out of crypto. It's not the only factor, but I think it's part of it. I was just looking at a historical chart of interest rate expectations heading into 2026. Right around Thanksgiving last year, the overwhelming expectations were for several rate cuts in 2026. There was a 2% chance that the market was pricing and the interest rates would be down at the 2% range, right? And so, I mean, there was just this massive shift that's happened, even up through the FOMC meeting last week, where now the expectations are several rate hikes. And I can't grapple with that not having an impact on investor sentiment, allocations, and how the markets are thinking about it, particularly in crypto. Now, equities obviously have shaken that off entirely, and I can understand the argument that it makes zero sense that would impact crypto and not equities. But I do think it plays a role here, and at least is a somewhat material driver of what's happening.
I think crypto is pricing in the fact that no one cares about it. Instead, people care about AI and robotics and GLP-1 drugs. And I think that's sucking all the attention out of the room and all the capital out of the room. And so people haven't taken the time to re-underwrite what's happening in crypto, which is that we are actually and in fact recreating how financial markets work in a very real way. And I think that's going to be rewarded by the market long term. But I think it's mostly this attention-based thing that is going on. And we need to get through that and then re-underwrite the new sort of green shoot cycle that I can see happening underneath the surface in crypto land. I think that's the big driver.
One of the most important takeaways from this discussion is that Hougan isn't dismissing short-term risks. He acknowledges that Bitcoin could still experience volatility and that market conditions remain uncertain. What separates his outlook from many others, however, is his belief that the fundamental forces driving adoption continue to strengthen regardless of temporary price movements. Institutional participation remains in its early stages. Major financial firms continue building infrastructure around digital assets, and regulatory clarity is gradually improving in many parts of the world. From that perspective, short-term corrections may be less important than the broader direction of travel. His disagreement with Ryan Rasmussen also highlights a growing divide among market observers. Some believe macroeconomic factors such as interest rates remain the dominant force influencing crypto prices. Others, like Hougan, argue that investor attention, liquidity conditions, and long-term adoption trends matter far more than whether rates move 25 basis points higher or lower. While both sides present compelling arguments, the debate itself reveals just how complex the current market environment has become. Perhaps the most compelling aspect of Hougan's thesis is his assertion that investors may be underestimating the scale of what is being built within crypto today. While headlines remain focused on short-term price action, he believes a deeper transformation of the financial system is quietly unfolding beneath the surface. If that assessment proves correct, today's uncertainty could eventually be viewed as just another temporary pause within a much larger adoption cycle. As always, though, markets have a way of humbling even the most confident forecasts. That's why staying informed, remaining patient, and maintaining a long-term perspective are more important than ever. Whether you agree with Hougan's outlook or side with Rasmussen's concerns about macro conditions, the coming months could be some of the most important in Bitcoin's history. If you found value in this analysis, please consider supporting the channel. The easiest way to help is by liking this video, subscribing if you haven't already, and turning on notifications so you never miss future updates. You can also share this video with friends. Every like, comment, and share helps this channel grow and allows us to continue producing in-depth content covering Bitcoin, crypto markets, and the global economy. Thank you so much for watching, and we'll see you in the next video.